Money lost isn't the same as money gained. Losses feel at least twice as painful as gains feel pleasant. Ask people if they want to take a risk with 80% chance of success, and most say yes. Ask instead if they'd incur the same risk with 20% chance of failure, and many say no. These were the words of late Daniel Kahneman, the Princeton professor of psychology who won the Nobel Prize in economics for his pioneering work in behavioral finance. Kahneman, who passed away recently, elaborated in his best selling book, Thinking Fast and Slow, how investors react to the prospect of profits and losses. The reason I'm referring to this is because stocks from the pharma sector have found a sudden surge in investor interest of late. Pharma companies, unlike their counterparts in the healthcare industry, have a very unpredictable earnings cycle. New drug launches could possibly bring in blockbuster revenue. Loss of patents or patent led litigations can cause revenues to nosedive. To add to that, regulatory embargo like the US FDA warnings are additional dampeners. So, investors have been way too hesitant about pharma stocks over the last few years. Just as Cayman explained, the prospect of loss have kept investors more wary than the greed of gains. Has something changed now? Well, the prospects of pharma stocks globally are tied to what is called the patent life cycle of drugs. The last phase of this cycle in the US generics market is known as the patent cliff. This is when products go off patent, that is, they lose the regulatory exclusivity on selling a particular drug. After this phase, the drugs become generics, a category that Indian pharma companies have developed expertise in. Drug makers in India have been making generic versions of the off patented drugs for decades at a fraction of the cost. The last time such a patent cliff occurred in the US during 2011 to 15, when generic competition emerged for several large pharmaceutical products. The competitive pressure in the US generics business intensified following the previous patent cliff in 2015. Pricing deteriorated as players fiercely competed for market share in older products. The entry of new players, including many from India, further heightened the competitive landscape. A similar environment is shaping up now with an anticipated wave of another patent cliff on the horizon between 2024 and 2028. Drug patent expiration is notably one of the reasons for the growth of the generic drug industry. Since the drug going off patent reduces healthcare costs, the worldwide demand for generic drugs continues to grow. With India having a robust pipeline of generic drugs, this upcoming cliff will provide a tremendous growth opportunity for Indian pharma companies. Further, major Indian players have taken proactive steps by filing abbreviated new drug applications or ANDAs to seize the upcoming opportunities in the small molecule patented drug segment. The patent cliff, which exposes large patented pharma products to generic competition, is expected to generate additional revenue for the entire generic pharma industry. This is likely to increase the global interest in such companies, thereby opening up investment opportunities for the generic drug sector in India. And upscaling in products will also pave the way for R&D investments in generic pharma companies in India. Meanwhile, Biocon has won approval from the UK regulator for the first generic version of an injectable drug, which is losing patent protection in November 2024. Novo Nordisk's weight loss drug is amongst the first anti-diabetes, anti-obesity medication to lose patent protection. Several pharma companies are eager to enter this segment of market, which is expected to touch $100 billion by 2030. Of course, Biocon will not be the only Indian generic company to offer drugs cheaper in the Indian market. Biocon's competitors like Sun Pharma, Dr. Reddy's Lab, and Cipla are also developing their anti-obesity drugs. But Biocon could have an exclusivity period for the generic drug for a first mover advantage. Of course, this is just one of the drugs that is set to lose patent in the coming decade. Several smaller Indian companies with a larger exposure to the US markets, including Zydus Life Sciences, Torrent Pharma, Aurobindo Pharma, Ajanta Pharma, etc., are expected to be the primary beneficiaries of this patent cliff. While the sharp drop in the pricing of generic drugs remains a risk, Indian pharma companies that could tap into the opportunity of patent cliff profitably stand to win favor amongst investors over the next few years. Do check out the financials of the best pharma companies in India on the Equitymaster screener. Hope you like this video. Thanks for watching.